A virtual currency or virtual money has been defined in 2012 by the European Central Bank as a type of unregulated, digital money, which is issued and usually controlled by its developers, and used and accepted among the members of a specific virtual community. The US Department of Treasury in 2013 defined it more tersely as a medium of exchange that operates like a currency in some environments, but does not have all the attributes of real currency. The key attribute of virtual currency does not have, according to these definitions, is the status as legal tender. Virtual currency that substitutes legal tender has been known as a scrip. Definitions: in 2012, the European Central Bank defined it as a type of unregulated, digital money, which is issued and usually controlled by its developers, and used and accepted among the members of a specific virtual community. In 2013, Financial Crimes Enforcement Network, a bureau of the U.S. Treasury, in contrast to its regulations defining currency as the coin and paper money of the United States or of any other country that, I, is designated as legal tender and that, I circulates and, I is customarily used and accepted as a medium of exchange in the country of issuance, defined virtual currency as a medium of exchange that operates like a currency in some environments, but does not have all the attributes of real currency. In 2014, the European Banking Authority defined it as a digital representation of value that is neither issued by a central bank or a public authority, nor necessarily attached to a fiat currency, but is accepted by natural or legal persons as a means of payment and can be transferred, stored or traded electronically. History of the term: in his written testimony to the 2013 congressional hearing on virtual currencies, Ben Bernanke stated virtual currencies have been viewed as a form of a euro or electronic money, a euro or area of payment system technology that has been evolving over the past 20 years, in reference to a congressional hearing on the future of money before the Committee on Banking and Financial Services on October 11, 1995. The Internet currency FLUS was created in 1999. The term virtual currency appears to have been coined around 2009, paralleling the development of digital currencies and social gaming. Although the correct classification is digital currency, U.S. government institutions have preferred and uniformly adopted the term virtual currency, first the U.S. Treasury's FinCEN, then the FBI in 2012. The General Accounting Office in its 2013 report and other government agencies testifying at the November 2013 Senate hearing about Bitcoin, like the Department of Homeland Security, the U.S. Securities and Exchange Commission, the Office of the Attorney General. Limits on being currency: attributes of a real currency, as defined in 2011 in the Code of Federal Regulations, such as real paper money and real coins, are simply that they act as legal tender and circulate customarily. The IRS decided in March 2014, to treat Bitcoin and other virtual currencies as property for tax purposes, not currency. Some have suggested that this makes Bitcoins not fungible, that is, one Bitcoin is not identical to another Bitcoin, unlike 1 gallon of crude oil being identical to another gallon of crude oil, making Bitcoin unworkable as a currency. Others have stated that a measure like accounting on average cost basis would restore fungibility to the currency. Categorization by currency flow: closed virtual currencies. Virtual currencies have been called closed when they have no connection to the real economy, like currencies in online games only, such as World of Warcraft. While there may be a black market for exchanging WoW gold against real-world assets, it is expressly forbidden by the owner of WoW. Virtual currencies with currency flow into one direction: this type of currency has been known for a long time in the form of customer incentive programs or loyalty programs. The first known coupon in history is probably from the U.S., attributed to Asa Candela, inventor of Coca-Cola and the free drink coupons in 1887, followed by C.W. Post's 1-cent off coupon and breakfast cereal boxes in 1895, both to drive sales. The business issuing the coupon functions as a central authority. Coupons remained unchanged for 100 years until new technology enabling credit cards became more common in the 1980s, and credit card rewards were invented. The latest incarnation drives the increase of Internet commerce, online services, development of online communities and games. Here virtual or game currency can be bought, but not exchanged back into real money. The virtual currency is akin to a coupon. Examples of frequent flyer programs by various airlines: Microsoft Points, Nintendo Points, Facebook Credits, Ben and Amazon Coin. Convertible virtual currencies. A virtual currency that can be bought with and sold back for legal tender is called a convertible currency. It can be centralized as Linden dollars, the online virtual currency of Second Life, or decentralized, as for example Bitcoin. Centralized versus decentralized virtual currencies. FinCEN defined centralized virtual currencies in 2013 as virtual currencies that have a centralized repository, similar to a central bank, and a central administrator. A decentralized currency was defined by the US Department of Treasury as a currency that has no central repository and no single administrator, and that persons may obtain by their own computing or manufacturing effort. Rather than relying on confidence in a central authority, it depends instead on a distributed system of trust. Bitcoin, an example of a decentralized, convertible virtual currency. Bitcoin is the first truly decentralized global currency system, and at the same time the largest virtual currency as of 2014. Trust in the currency is based on the transaction ledger, which is cryptographically verified, and jointly maintained by the currency unregistered trademark S users. The Bitcoin Foundation claims that Bitcoin was designed to be fully decentralized with miners operating in all countries, and no individual having control over the network, and that Bitcoin is as virtual as the credit cards and online banking networks people use every day. Bitcoin mining has become increasingly centralized, and cryptologic researchers have questioned if Bitcoin is indeed a decentralized currency. To improve Bitcoin's decentralization, they suggest to encourage fully decentralized mining pools, allow only one vote per Bitcoin client, and to increase transparency in decision-making. The money matrix. Digital currency is a particular form of currency that is electronically transferred and stored, that is, distinct from physical currency, such as coins or banknotes. According to the European Central Bank, virtual currencies are generally digital, although their enduring precursor, the coupon for example, is physical. A cryptocurrency is a digital currency using cryptography to secure transactions and to control the creation of new currency units. Since not all virtual currencies use cryptography, not all virtual currencies are cryptocurrencies. Cryptocurrencies are generally not legal tender, with a possible future exception of a government-run cryptocurrency to be created in Ecuador. Regulation. Virtual currencies pose challenges for central banks, financial regulators, departments or ministries of finance, as well as fiscal authorities and statistical authorities. Gareth Murphy, Central Bank of Ireland, described the regulatory challenges posed by virtual currencies as relating to economic statistics, monetary and exchange rate policy, tax leakage, payment systems and settlement infrastructure, consumer protection, anti-money laundering, impact of financial regulation on financial service providers, US Treasury Guidance. On March 20, 2013, the Financial Crimes Enforcement Network issued a guidance to clarify how the U.S. Bank Secrecy Act applied to persons creating, exchanging and transmitting virtual currencies. Securities and Exchange Commission Guidance. In May 2014, the U.S. Securities and Exchange Commission warned about the hazards of Bitcoin and other virtual currencies. New York State Regulation. In July 2014, the New York State Department of Financial Services proposed the most comprehensive regulation of virtual currencies to date. Unlike the U.S. federal regulators, it has gathered input from Bitcoin supporters and the financial industry through public hearings and a comment period until October 21, 2014 to customize the rules. The proposal would curb anonymity of the consumer, yet per NYDFS press release A sought to strike an appropriate balance that helps protect consumers and root out illegal activity. It has been criticized by smaller companies to favor established institutions, and Chinese Bitcoin exchanges have complained that the rules are overly broad in its application outside the United States. See also. References